what we're hearing in the United States from President Trump, from Senator Elizabeth Warren, and from our U.S. Treasury Secretary Scott Bessent is we need lower rates. And this is, of course, a wrecking machine and will be utilized, I guess, to at least attempt to keep the stock market propped up on that. But again, the law of diminishing returns applies. And the fact that the world debt to GDP ratio is so detached from any kind of reality, we can't fix it without some kind of a demolition, whether it's going to be a controlled demolition by raising rates, letting the markets play out. Again, look what would it do to the stock markets of the world? It would cause a lot of problems here. We're going to get that either way. There's no reality. There's no price discovery. The fact that the world equity markets are nothing but floating, a house of cards floating on a pool of gasoline.
On this episode of What the Finance podcast, I have the pleasure of welcoming back Gregory Mannarino, well known as the Robin Hood of Wall Street. So, Greg, thanks so much for coming on the podcast today.
Thanks for having me. Glad to be here. It's been way too long.
Yeah, I know. I was saying we were just talking before. It's been almost probably over a year, I think. So everyone's excited to hear what you have to say now in the updates. But yeah, what are you currently seeing in the world and in the markets?
Oh, wow. That's a very broad. What's going on here? Well, it's a continuation, I guess, of what we're seeing here, although I think it's going to get a lot worse, a lot faster because of the global debt situation here. We have a global economy that's in a lot of trouble. We have a global debt issue that seems to be insurmountable. It's only going to get worse. Unfortunately, the middle class is continuing to be squeezed. I don't care where you are here in the world, anywhere. And it's going to be a struggle for people moving forward here with regard to multiple levels. But understanding these issues really shouldn't be a downer for people. I think that presents opportunity. Look, we have to take in the entire situation. It's not that hard to understand, and then look for the best places to put our cash to work, or at least to preserve something going as we move forward. I think there are a lot of opportunities here, honestly. With regard to equity markets, it all depends on monetary policy by central banks, what they're going to continue doing moving forward. Also, the law of diminishing returns applies here. But with regard to opportunity in suppressed assets and even in cryptocurrencies, as of late, we've seen a pretty big drop. I think there's a lot of opportunity here.
Yeah, okay, lots to touch on there. And yeah, you said that people are struggling. Is it just the continuation of what we've seen the past few years, or do you think anything's really changed the last 6 months, or what are you seeing there?
Well, let me say this though. I mean, what's going on here is obviously a lot of issues with regard to economic policy by our new president here in the United States, and people, I understand they're still in this gleeful stage, but they're not thinking deep enough about what it means. A lot of this means for the economy here and around the world. Not one, and look, I'm not. This is going to upset a lot of people what I'm about to say, but it's the truth if they just think about it. There's not a single economic policy being put forth right now here by President Trump that's going to help the middle class at all here in the United States nor around the world. And the widening issue with regard to tariffs and reciprocal tariffs is nothing but a tax that people are going to have to pay on top of the disappearing act with regard to the currency purchasing power as central banks dissolve it moving forward. So I don't think people are prepared for what's happening here and what is going to happen. In fact, I did a video this morning calling it a mushroom cloud economy. And this is not just a phenomenon that we're going to see unfold to a greater degree in the United States, but this is going to play out to really hurt the middle class around the world. And they still have to deal with the people of the middle class of the world, issues that have been in effect. I mean, with regard to currency purchasing power destruction, artificially suppressed rates, market rigging to the highest possible order. It just is not going to stop. And it's leading us into a grand finale. But I think there are solutions to this. We're not going to see that unfortunately, because it's the ripple effect. I mean, for example, what is the main solution? The main solution is to return purchasing power to the currency, and that would mean we need higher rates around the world, dramatically higher. And of course, this would be not very good for equity markets or stock markets of the world. In fact, we're in a multiple bubble and inverse bubble environment, and all of this has been built on the back of artificially suppressed rates and currency purchasing power destruction. And that's the root cause of the problem, why the world economy is in the situation that it's in right now. I would say it's in its death throes right now. And it really is a wrecking machine. What people don't understand is the mechanism, the same mechanism that has kept the stock markets propped up is the same mechanism that has destroyed the middle class and the economy of the world. And that is, again, comes back to the root cause of this entire issue is artificially suppressed rates and currency purchasing power destruction. So we need to fix the root cause of the problem and address everything else. I believe the best situation here would be a controlled return or a reset, if you want to call it that, instead of what's being prepared here by central banks here. Controlled meaning, if, for example, we had a single world leader who said, okay, we need to start raising rates and let's work with the central bank to make that happen. What we're hearing in the United States from President Trump, from Senator Elizabeth Warren, and from our U.S. Treasury Secretary Scott Bessent is we need lower rates. And this is, of course, a wrecking machine and will be utilized, I guess, to at least attempt to keep the stock market propped up on that. But again, the law of diminishing returns applies. And the fact that the world debt to GDP ratio is so detached from any kind of reality, we can't fix it without some kind of a demolition, whether it's going to be a controlled demolition by raising rates, letting the markets play out. Again, look what would it do to the stock markets of the world? It would cause a lot of problems here. We're going to get that either way. There's no reality. There's no price discovery. The fact that the world equity markets are nothing but floating, a house of cards floating on a pool of gasoline, it's going to go up either in a very dramatic, rapid way, or we could choose to do it the easier way. Won't be easy, but the easier way is to allow ourselves to at least start to gain some purchasing power of the currency. And the issue is this: there's a massive lag effect. Even if, in fact, say the Federal Reserve or whatever central bank starts to raise rates first, it's not going to hit right away. The lag effect of that is of an indeterminate length, actually, because of the global money velocity it's terrible right now. We're going nowhere here. So it would take a while for that to work its way through. That's why it needs to start now. We can't just hope, assume that if, let's say, one world leader were to work with their central bank, say, listen, we need to return some purchasing power to the currency because this is literally the root cause of the problem. Even if they started, the effect of it wouldn't be seen for many, many, many months. And the deterioration would continue for a while. There's a humongous lag effect here. Always is. And that's why I've been telling people that action needs to be taken now. We can't wait anymore because we're seeing a particular dynamic in play that we haven't seen since the early 1970s, where we had skyrocketing inflation, at least here in the United States, and there's a ripple effect around the world. And that's what's going to happen again. There's no doubt about it. You have to wonder, if we know these things, how is it that certain politicians who went to Wharton Business School and talking about President Trump here, I'm not putting them down, it's a fact, okay, for those of you that may get triggered, and the fact that central banks, they know it too. They, of course. So either this is deliberate and they're deconstructing the world economy, and again, as a mechanism to issue in a new system, which I really believe is the case, or something. I mean, there's nobody wants to help the middle class here. It's an unfortunate thing. It's what we're seeing, especially here in the United States, is a move to foster what I've been warning about is going to happen for over 10 years. The creation of a neo-feudal system, this President Trump's gold card system, actually allowing wealthy investors to buy essentially citizenship here in the United States at $5 million a pop, and then they get a tax break on top of that. It's an interesting phenomenon, and this is exactly what I've been explaining to people is going to happen, and to see it unfolding before our eyes it's kind of interesting. Extreme haves, extreme have-nots, a wipe out of the middle class, not just here in the United States, but around the world. And this mechanism is going to accelerate. There's just no doubt about it. Again, going back to the mechanism of easy money or artificially suppressed rates and currency purchasing power losses, this is also a wealth transfer effect. It goes back to what's called the Cantillon effect, where easy money makes its way to the rich first, and then it trickles down through the economy to the rest of us. And then by that point, the currency has been so massively devalued that there's no purchasing power left. And that mechanism is in full effect. It's been in full effect since the so-called financial crisis of 2008. But there's no way to stop it. There's no roadblocks right now being put in the pathway of this. It's only going to get worse from here.
Yeah, so it is really scary to see, and it sounds like what you're saying is this continual prioritization of creditors to versus savers is what's really creating this imbalance in the system.
Well, that's a great way. It's grand theft on an unimaginable scale. And I've been explaining this to people forever, it feels like to me. And there's no pushback to exactly what you just said. People are just sitting here willing to take, smack across the face this way and the backhand the other way. And they're sitting here hoping that maybe some kind of a miracle is going to happen. It ain't going to happen, especially in this environment right here, right now. It's unfortunate. Certain things have occurred here in the United States which are good. There's no doubt about it. President Trump has done some things that needed to be done. There's no doubt. Okay, but there's not a single thing, not one thing that he's done right now that is actually going to benefit the middle class moving forward. And I would expect the economy to deteriorate further, faster moving forward, along with deficits as well. Look, there's a lot of people. I am not against President Trump at all. I want to see power being restored to the people here. It's not going to be. The wealth transfer effect is still in effect. In fact, maybe even to a greater degree moving forward. And it's an unfortunate thing because people always fall through these trap doors, and they're not. People can't think clearly in this environment. They don't sit back and evaluate what's going on. With the flurry of executive orders, they don't have a chance to even focus on them. It's at a pace we've never seen, and I really believe this is not by accident either. And nothing that happens in government is by accident. It's flurry. I mean, it's out of control here, and no one can focus on what's happening. It's hitting them too fast, so they can't sit back and think about what the economic ramifications are going to be. And with regard to these federal layoffs, and I agree with President Trump on this one, this needs to be done. But I said this morning in my video, even if they cut two-thirds of, even more than that, potentially of government, the jobs here in the government here, the ripple effect is not going to be contained, if I want to use that word from Ben Bernanke, with regard to at the federal level. This is going to bleed out across the entire economy to the private sector. But people aren't thinking about that. They don't. They live in the moment like an animal does. They don't think about what the ramifications are going to be. I don't, even though what I'm saying is I believe what President Trump is doing needs to be done. It's being done in a way I don't agree with. This sledgehammer approach, it's reckless. Definitely the better way would have been to more methodically focusing in on where the corruption and fraud is, wherever it might be with regard to Doge, for example. Okay. There's still no real numbers being put out with regard to that. It's all, even Elon Musk himself admitted that these numbers are actually not correct. So, but people are ignoring that too. There's no accountability. There never will be. People have lost the ability to, unfortunately, I can't believe it, but it's the way it goes. There's no accountability. People have lost, any kind of backbone to push back, to say, hold on a minute here. You're admitting that these numbers are fake. We know they're all fake. The government data statistics are all fake across the board. And with regard to Doge, these numbers by Elon Musk, please, people, look this up for yourselves. Don't take my word for what I'm saying about anything. He's admitted that the numbers are not exactly right. How can they put out numbers that aren't right? I don't understand that. With regard to economic data that we got today here in the United States, it's all terrible. With regard to job numbers coming in way worse than expected, pending home sales, the worst we've ever seen in history. As a matter of fact, this just came out, breaking news about an hour ago. These numbers here, and even that, they're not real. If people actually understood the gravity of what's going on, I think they'd be running for the hills right now, or at least trying to protect themselves. I believe we're going to see, and it's a pretty obvious thing around the world, and especially here in the United States, unfortunately, we're going to see supply chain disruptions. The availability of resources already getting hit. Inflation is not going to stop. There's nothing standing in its way here, regardless of anything else. So that's the situation. But as dire as this sounds, I think there are solutions here. I already covered what I think needs to happen with regard to returning purchasing power to the currency. It's not a hard thing to do, but it has to start now. Otherwise, again, due to the lag effect, people are going to suffer a lot longer than they have to. The global economy is in a flux right now. And I think, honestly, we, the people, if we had a backbone, could choose how we want this to hit us, either in a controlled way or in an uncontrolled way. It seems pretty obvious that a controlled way to allow the system to somewhat normalize, because there's nothing here that's real. It's all the distortion of any kind of reality. The financial system is it's in shambles, and it's not real. It's all based upon this debt-based system, as we all understand. At least I hope people understand that. It's black hole. The banks are in all kinds of trouble here with negative balance sheets. So the system is coming apart, and what we are going to face in an uncontrolled situation is a credit freeze across the world, a situation where the flow of credit or the flow of debt through the markets and the economy is going to stop. That's really the issue behind why we're seeing central banks inflate and inflate and inflate, and politicians calling for lower rates here and more easy money, because they do realize that that's what's going to happen. And we can prevent that if in a controlled kind of a situation where people are going to feel pain across the spectrum of everything. I mean, the economy would get hit at first, no doubt about it. The equity markets or the stock markets absolutely would get hit. Real estate, you name it. There's not one asset class I don't think that would escape it. But again, I still feel that a controlled situation is better than an uncontrolled situation. What do you think?
Well, I think it's the risk of, our current system or at least the US system, where in 2 years' time there'll be a midterms. Let's be honest, most incumbents lose their majority, and then they can't make any changes. And then I know it's different with executive orders, but that is the challenge, I think, that maybe the president will face. And there's all this legal battles as well coming along. So unless you make change, the system will delay until you're voted out. And that's something in the UK. It's something I'm assuming in the US and in all other countries. It is the challenge.
You know what it is? And I've been telling people, the fact of the matter is people can't come together anymore. They can't. They've been putting their little boxes on either one side or the other, whatever it might be. And due to that, it's the oldest trick in the book, the divide and conquer mechanism. They can't come together to elicit change. And that's why no matter how bad things get, there's going to be some people that are going to defend it, and then blame. Of course, it's always the blame game. It's the fault of that. It can't, because people have a hard time dealing with the fact that maybe they've made poor choices. And I'm not saying this would have been worse, in my opinion. And here in the United States, there's no doubt. Hey, look, man, I know it's no secret that I was not a fan of Joe Biden. All right, everyone knows that. I had a slew of, and I'm trying to break out of this habit of bad names for him and the administration over there. And so that's no secret. What I try to do is try to look at things from an objective standpoint and say, look, man, these are the policies in effect. This is what's going on here, and this is how it's going to affect all of us. And then again, I don't just focus on what's happening here in the United States. This is a worldwide phenomenon, and we're all going to pay for it. Until, I guess, I don't know, man, look, it looks like we're going to be facing a worst case scenario with regard to the financial system and the economy. And that means, again, that as always, it's the middle class that bears the brunt of this. And it's a very, very unfortunate thing. And I really wish that people would start to wake up and realize that, if we don't come together, if we don't unite and demand change and hold people accountable, nothing's going to change. It's just going to continue its current pathway. It's not too hard to just connect the dots.
But yeah, so if we look, you're saying that money sort of yeah, worth less. These interest rates need to be higher. The challenge, I guess, if I look at it, is that there's this never-ending refinancing bubble that keeps growing and growing and growing. So unless you sort of write off a lot of this debt, it seems like increased interest rates or high inflation, increased interest rates is just going to mess up the system.
Well, the thing is, we got to break the cycle. Breaking the cycle means we need to feel some pain here. There's no doubt about it. And the mechanism of the currency being destroyed is, to me, the purchasing power of the currency is, to me, the actual core of the entire thing. And everything else kind of fans out from that. We got to return purchasing power to the currency, to the people. I mean, this trickle down economics don't work. I mean, I don't know what else how much more proof people need. We already have the situation where we have historically low rates around the world. Look at the world economy. How's it working? What's the solution here? Make it just do the same thing and expect it to be different? I mean, no, come on, man. It's just isn't going to work. So we need a radical change, but it doesn't seem like we're going to get it. It's unfortunate, but I'm not surprised. I think, look, I've been trying, and I think, very hard to explain to people for over 10 years where we're going, and it's unfolding. It's just happening right now. And again, just understanding the dynamics in play makes it extremely easy. Really, I keep telling people it's too easy to realize that if we don't break the current trajectory of things, they're only going to get worse. It can't get better until we hit a moment here. Again, the reset of the entire system is eventually going to be a debt market implosion. I think everyone knows that. And that's going to lead to a locking up of the system. The flow of credit or debt to the system is just going to stop. And that's going to wreak havoc. I mean, I can't, and that might, I mean, underscore that on a scale that people are really not ready for. And then they're going to sit there, as they always do, and wonder what happened. Well, why did this happen? I thought that this policy was going to work, and I thought that policy was going to work, and our leaders would never let this happen. Well, that was really the issue in 08, was not the market crash. And this is what they got people so focused on during the financial crisis, with the markets were crashing. That really wasn't the problem. The issue underneath it was the flow of credit was locking up, henceforth why Bernanke here was rushed into Washington to say, hey, guys and girls, if we don't start pumping billions into the economy over this weekend by Monday, we're not going to have an economy. He didn't say a market, an economy. So what he was clearly understanding what was occurring. Interbusiness lending was stopping. Credit markets were freezing. We are going to face that again. I can't stress this enough. And it's almost like it's a setup. They know it. So what are they doing to just exacerbate the issue? There's not one roadblock, not one right now, standing in the way of that happening. So it is going to happen. And understanding that the global situation is so much worse off than it was in 08, that the ramifications are going to be that much worse as well, on levels of magnitude that I really don't. How do I say this another way that people really are not prepared for? Maybe people that follow our work are, because I believe that we're trying at least to let people understand that, look, they got to be prepared always in every aspect of life for a worst case scenario. You always got to have the high ground. You got to look at things and say, okay, what's the most likely situation here? And it's pretty obvious to me what the most likely situation is, everything we've been talking about. But people need to start acting and start holding people to account. And it's already too late, in my opinion. People have been lulled into something else. I don't know what it is yet. They don't think. They live in the moment like an animal does, or like a child does. They don't think of what the ramifications might be for what's happening now down the line. It's astonishing that as adults, but I get, here's the situation: is people are forced to work very hard now just to make ends meet, and so they can't focus on anything else except going out there and trying to provide for their family. Let's say for the middle class, which is in the most rapid decline that we've ever seen in history, and there's a wipeout. I've been telling people it's an extinction level event that is occurring. And I've been telling people for, 10 years that they have a tattoo on their face in the shape of a target. They're being eliminated. And this process is accelerating moving forward here. But that's the deal. The thing is, people can't focus on anything else. And I really hope that people listen to, let's say, this talk that we're having, you and me, and say, well, you know what? Some of this makes sense to me. So I'm going to, maybe some of it doesn't. I get that. But look, man, I'm not here to try to change anybody's mind about nothing. I want people to listen to what I'm trying to say, or what I have been saying here, see how it hits them, because people do have a God-given gift. It's called an intellect. And is it hitting you the right way, what I'm saying? Is it hitting you the wrong way, what I'm saying here? If it's hitting you the right way, say, you know what, this kind of makes sense, and maybe I need to take. That's what I want people to do. Think for themselves. Don't allow me to sway you one way or the other, but do your own homework. Do your own. It couldn't be easier today, especially with this AI stuff out there. That's pretty much people are utilizing that and they're talking to it as if it's a living entity. It's kind of spooky. I used that just last night for the first time, discussing issues with the economy with this AI thing, and I was like, this is either it's astonishingly incredible or it's just astonishingly frightening, because it's literally like you're talking to a person. So what is it? Anyway, kind of an interesting phenomenon.
Yeah, at the start of the interview, you were talking about opportunities that you're seeing. So yeah, what can you maybe go further into that?
Well, look, man, sure. I mean, it goes back to, I've been telling people for what it feels like 1,000 years, man. You know, you got to bet against the system. The system is being fueled with more and more debt. That means that we need to be on the opposite side of that trade, meaning we need to be in assets here that are anti-debt units. Okay. I've been telling people my favorite asset of all time, and still remains, is physical silver. I just love touching it, smelling it, playing with it. I really feel like it's the most undivided asset in the world. The second most undivided asset would be gold. In my opinion, look, I don't sell this stuff. I have no vested interest in this, but I believe that's the best way to bet against the system, and becoming your own central bank. I've been telling people this since day one. I think there's massive opportunities in commodities pretty much across the board. These are real things. I also believe, and I know a lot of people are going to disagree with me on this. I've been telling people this for, again, what feels like 1,000 years, is cryptocurrencies. I feel that we're going to get, this is a simple deduction of how this will play out. Okay. I want people to think about what I'm about to say here. We understand that the debt market of the world is a time bomb. At least we should. It's being hyper fueled with more fuel. In the form of debt, and a debt in many different forms. Debt in currency issuance by a central bank. They don't issue wealth; they issue debt. Currency being issued by central banks. These are units of debt, and we don't own them. The currency that is issued by central bank is owned by the issuing central bank, owed back to the issuing central bank, plus cash that they create out of nothing, plus the interest that they create out of nothing. Okay, so that system is, we need to be on the opposite side of that. I think commodities are the way to go. With regard to cryptocurrencies, I understand that many people think, well, Greg, they're not real, they're not on the elemental chart. It doesn't really matter. Okay, I believe we're going to see a massive flow into the crypto space as cash just seeks yield. Look, man, people hear these kind of terms. Oh, cash seeks yield. What does it mean? It means wherever something seems to be growing. Let's say in this case, it could be cryptocurrencies or whatever. That's where cash is going to flow into. And just understanding that the mechanism of an implosion in the debt market is going to cause bond yields to spike so rapidly. With regard to the 10-year yield, the benchmark around the world, you're going to see, a spike of 20, 30, 40 basis point jumps in a day. What does that mean for the stock markets of the world? They're going to sell off so fast, people aren't going to know what happened. And everyone runs to the door at the same time. In a meltdown situation, which is what I'm talking about, everyone looks to get rid of their assets at the same time, and that presents a major problem with people trying to unload what they're losing cash on at that particular time. Like, I want to sell asset XYZ, but I'm willing to take this. So they go into their little computer screen and they put in a limit order. I am willing to sell it at this price. And all of a sudden, well, that doesn't work. And then they lower their limit again. They lower it again. And all of a sudden, it's a market order, and they're willing to take anything for it. This is a pile driver for the price of asset prices, and people are going to get wiped out. So bleed off or whatever, a meltdown in the debt. Look, where's the real crash going to start and end? It'll be in the debt market. It's not going to be in the stock market where everyone's looking. The debt market is the driver of this entire freaking freak show. Should be pretty obvious to people. At least I hope it is. And when that implodes, and this is what I'm talking about, it's going to wipe out the stock markets of the world, and then cash is just going to move into other assets, in my opinion. Again, commodities, silver, gold, platinum, palladium, crude oil, all this real stuff, tangible things, and maybe in some intangible things too, like cryptocurrencies. I really believe that's where we're going to see cash seek yield. It's that easy to understand this scenario. I can't imagine, and I wish I've been telling people this same scenario now for 10 years, and I have yet to hear why that's wrong. Because everyone I've spoken to, and I mean everybody I've spoken to, says that is how it's going to play out. And I talk to everybody, man. I am friends with, and I know people in all the big investment banks on Wall Street. Everyone's saying the same story. They don't talk about it, okay? Because again, these people, a lot of them got to keep their mouth shut because everyone knows where this is eventually going to go. But I mean, there are some at least trying to warn people in a way that they better be ready for what's coming here. And this environment is not real. There's not a single asset today that has a real price discovery mechanism behind it because of the mechanism of artificially suppressed rates, currency purchasing power destruction, central banks running the whole entire show. And that's kind of the bottom line. I know I'm rambling on here, but that's essentially where it's going to go. There's just, unless someone can tell me where I'm getting this wrong here. And we're already seeing the ramifications of it with global inflation. And it's not going to stop unless something acts against it, as we outlined earlier. This is exactly how it's going to play out.
Yeah, scary to think. But Greg, thanks so much for your time today. We've sort of gone in all different directions, and I think hopefully the audience have got a lot of value from it. But my last question is, what is one message you want people to take away from our conversation?
Man, people, start to hold people to account. Man, come together. The period, the end. We are not each other's enemies, no matter where you live in the world. They want us to believe we are, but we're not each other's enemies, man. If we don't come together, we're just done. And we have to make a choice. What do we want to do here? The choice, in my opinion, is up to us, but it's going to require action on our part. Is it going to happen? I hope so.
Great message. So thanks so much for your time again. If anyone wanted to find out more about your work and what you do, where would the best places for that be?
Oh, just Google me. I'm kind of everywhere. I'm easy to find.
Famous man. All right. I'll put it in the description anyway, because I know you have a really great YouTube channel. But yeah, Greg, thanks again.
Thanks, bro. I appreciate it.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.